varying sizes of building societies, so they have different things they have to think about. For example, branches, some of them have got hundreds of branches, some of them have got a couple of branches. There's a different dynamic there, but the common theme is there's value in a physical presence.
But it's a small world now. So actually there might be a retail bank in Thailand that's got a little use case that is relevant here in the UK, or an insurance firm in South Africa, or a startup bank in the Middle East.
What people want is a far quicker decision. They want the fact that the confidence in the decision, and they don't want a mortgage. They want the house, right? That's the need. The mortgage is the part of the process that they have to go through. It's pain.
Banking and building societies, to start with making it safer. It's not just about the expedience of the journey and the speed. It's actually the data can actually make that better for the borrower and for the lender.
Welcome to the FintechOS Podcast Evolv. Thanks for being here, folks. We're here to talk about building societies and, most importantly, the Whitecap report. Delighted to be joined by Mark Collings from Publicis Sapient, Thickett from the BSA, and of course yourself, Julian Wells, the author of the Whitecap report. Thank you for being here. I guess, Julian, let's start with the report. I mean, interviewed a whole bunch of people in the building societies world. Amazing experience. Well done. Congratulations to the team. Talk to me about some of your experiences there.
Yeah, thanks, Mark. It's a big piece of work, a significant piece of work. It was a follow-on from a report that we published in 2021, looking at the strategic landscape for the building society sector. It's a market a lot of people are very interested in. It's got some kind of unique dynamics, so the report aimed to explore those and to look across a whole kind of a plethora of topics, ranging from mutuality through to mortgages, savings, branches, technology, regulation, diversification, innovation, green finance. So there was a lot in there. The way that we did it was we did quite a lot of primary analysis of our own on the sector dynamics, what's been happening, sort of growth, sort of changing data points in the sector. And then we interviewed people as well. So we had a lot of direct engagement with people who support the sector, but the main thing was we spoke to the building societies themselves. So there's 42 building societies, and we interviewed 25 of the chief execs. So 60% of the market had a direct input. We had about an hour with each of those people. So we really got under the skin of what's happening, and I think that made it an informative report. We were working in partnership with the Building Societies Association and a number of other partners, including FintechOS.
Yeah, you got three partners here. Sapient as well. They sponsored it as well. So you mentioned the CEOs there. So it's interesting to report because there's been a lot of movement. The CEOs there, a whole bunch of new people come into that world. Yeah. Did you notice a difference between the old guard and new guard in some of those interviews?
Well, I suppose the first thing was I was surprised by how much movement there was. So it just kind of occurred to me as we were looking down the list of who we're going to talk to that there's quite a few new names. Yeah. So got the old list out from 2021, just went down it, and half the sector had a new chief exec, which I wouldn't have expected it to be that high. And there's even been more changes since the report was published. So I wouldn't say necessarily there's a difference between the old guard and the new guard. But those chief execs that have come into the sector obviously were going to be a bit younger because they're kind of they're a different stage of their career than those that are leaving. They typically retire building society chief execs rather than moving on to different roles, or they move into a more portfolio stage of their career. So I think quite a sort of a strong, positive, upbeat mindset is probably what I would characterise the newer chief execs by, and I think that was the real theme of the report, was a very positive outlook from those involved in the sector.
They're going to need that energy, right? Because in the report it's talked about, one of the major themes within the report is the ability to scale and grow, but keeping keeping true to their values and their mutuality. So that came across quite clear in the report. Yeah. How do they do that balance? How do they get that balance right?
Yeah, I mean, it's the thing about the sector. It's that sort of fundamental, it's the core purpose that drives through all these organisations. And whichever chief exec you talk to, they bring that to the fore in their own way, but in a really kind of common. They talk about being a purpose-led organisation, being there to serve their members ahead of shareholders, and making decisions that are not just driven by commercial outcomes or viability. So yeah, they all have a different way of doing that. The varying sizes of building societies, so they have different things they have to think about. For example, branches. Some of them have got hundreds of branches. Yeah. Some of them have got a couple of branches. Yeah. There's a different dynamic there, but the common theme is there's value in a physical presence for their members because people value that. So.
Absolutely. And Rob, from the BSA, you've I'd say it's the anniversary, isn't it? It's 250 years since the first building society, and you look at how those have evolved throughout that time, and there's going to be a whole bunch more evolution of building societies over the coming next 250 years, but they're still the ones that we're going to be alive with. So that innovation and the ethos, how do you see that balancing out?
I mean, I think it's delicate, and sort of there's a twin track approach. But I think, as Julian really was saying, it's about staying true to that core around what the kind of customers, their members, actually like. I was in a branch in Bridge North, Dudley Building Society yesterday. It's a new branch that they've opened up, and they've had tremendous impact already. They've only been there, I think, 4 weeks in that particular location. They had a pop up before that just to test the waters and see kind of what the uptake has been, but it's been really positive within that community. Yeah, and people really wanting, liking to having a physical presence that they can walk into, liking the fact that they somewhere they can actually have a passbook as well. So they explained to me they've been, talking to college students or 18 to 25, and really, can see the value in having a passbook to try and, actually account what you're saving each week or month. Yeah. And that really hasn't changed massively. I saw there's a recent news broadcast on BBC about building societies and passbooks. And, I think one of the building societies said in that, kind of a building society without a passbook is like a roast dinner without gravy. And I think there's a lot of truth there. There's a lot of value in that. And actually one of the ladies that was on that report, she's a real advocate for passbooks, and she showed me the passbook that she'd had from, I think it was her grandparents' passbook from 1942. Wow. And I'm not joking.
It's next to the ration book.
Well, yeah, exactly. But if you got out today's kind of passbooks, okay, there'd be printing text on it rather than kind of written, but they really aren't that similar. But these things still have a power and really do resonate with people. I think that's something, I think a lot of technology companies struggle with building societies to get that point that it's not going to be, let's just plug it all on the app. Yeah. Because a lot of the towns that our members are in, the banks are all pushing them down a kind of mobile first and closing their branches. And I think that is something, as Julian said, in terms of their business model, is about getting those deposits locally as well for their investment, and then able to lend those out for mortgages. That's been the kind of founding ethos since the very first building society in 1775. It was a pub in Birmingham. Richard Ketley, he was a landlord in a pub, and he was just got out tankards and allowed people to kind of stuff it in, and that little and often, that's the kind of founding part of the building society movement. It exploded over sort of the Industrial Revolution, but it's all about helping people to save, to save for housing as well. I know we're going to get onto that, but that still is there, and it's how can you kind of start to innovate those back office processes, but actually still stay true to that kind of physical interaction that people really love. Yeah, we were a minute into the podcast. We've all got the soundbite for the episode around roast dinners, so I'm not sure we're going to beat that. I might just pack up now. That's it, all over. So, Mark, like myself, you've been around for a few years now in the banking world, and you've been advising financial institutions now for a number of years. So what building societies and banks are very, very different, but is there any kind of learnings that you can see that the similarities between what banks have gone through and what building societies are going through, and how they can
and then start to learn off of each other.
Yeah, absolutely. And firstly, many congratulations to Whitecap on the report. I thought it was a fantastic insight of the opportunity for building societies. And as you said, Mark, I'm many years in commercial banking predominantly, and I've recently, in the last few years, actually started to really enjoy the building society sector from an energy, ambition, and sort of innovation perspective. And going back a few years, I was actually asked, who do you know within the building society industry? And my first reaction was, not many. But actually, when I took a little bit of time just to sort of understand, and linking into what Julian said around a lot of the C-suite in recent years has not just transitioned from commercial and corporate banks, but from other financial institutions. I think that's a real opportunity for the sector to grow sustainably, bring some of the best practice from some of those sort of commercial and corporate banking environments, and also bring some of the technology advantages. And on Rob's point earlier, it's about balance, I think. And I said to my son last week, my son's 19, and I said, I'm doing a podcast. So firstly, he thought that was really cool. And then I said about the building society sector, and he said, what's that?
Yeah, wow.
What is the building society sector? And he's just starting on his road of savings and his first career, to which my wife then went and got the passbook out of the drawer from many years ago and started talking around this concept. So my son physically thought, this is really cool. How do I get engaged? His first reaction was to go to his phone. And it's how do you get that coolness and balance, especially with the savers and the home buyers of the future, so that it resonates with a different generation, as well as some of the elder generation that I'm definitely more attuned to. So I think huge opportunity for the sector as a whole, and that bit around bringing in from the outside into the sector, but still keeping the cultural aspects and the loyalty of what's inside the sector already is really interesting, a huge opportunity for growth.
Yeah, it's interesting because, Julian, going back to the report, I have this thing that you put a pound in a jar every time you mention the word AI, and it was mentioned so many times in the report. And much like in the banking sector, AI is as much a risk as an opportunity. So it depends what the use cases are. So when you're chatting, or when your team were chatting to the CEOs, AI is going to be a massive part of the future innovation of this industry. Were they starting to identify some of the early use cases for builder societies for their members in those conversations?
Yeah, they were. Yeah, and I think building societies are often sort of tarred with a brush that they're behind the times with technology, and I think sometimes you can point to things that are maybe examples of that. Passbooks are often mentioned. It's interesting hearing that in the conversation today. Yes, we asked all the chief execs about AI, and we asked them all what they were doing with it, and tried to sort of push them on as much detail as we could. And I think the sort of common theme, which is common across all the financial services clients that we have at Whitecap, was that they're experimenting. And they're identifying sort of small pockets of pilots, use cases where they can just see what AI can do. It's so well understood now. Oh, I say understood. So the awareness is so high of some of the benefits of AI. So we heard about internal uses, some limited external uses, but we heard about things like process efficiency. We heard about things like customer services, complaints management, analysis of complaints, because there's a time critical element to that, so it's a logical area to look at. We heard about onboarding, credit. I'm not sure about credit decisioning, but part of the the application process. So quite a few examples. What we didn't hear about, which didn't surprise me, was widespread adoption or deployment of organisation-wide AI products and services. But I don't think many people are doing that yet anyway. So I don't think that wasn't surprised by what I heard. I was probably encouraged by it, though.
Yeah, that's good, because I mean, look, it falls into any kind of digital transformation, and as you said, building societies are probably slightly behind the times a little bit, and they've got a whole bunch of legacy technology that they're sitting on, much like a lot of the banks that we've seen before, and replacing that kind of core technology is like open heart surgery and brain surgery at the same time. And there's been so many failures, and they cost a whole bunch of money. So that ability to modernize is, I think that people take a far more modular approach, a far more slower approach to that. And I guess, Mark, we see it as well. It's going to be a hell of a challenge for build size. Yeah,
absolutely. And my view is small steps.
Yeah,
very small steps. I'm a big fan of greenfield, but within a legacy. So actually maybe carve out something which is quite niche and maybe start internally, as Julian said, on some of, process re-engineering with an AI theme, just to build a little bit of confidence internally, especially that this can be safe, it can be better, it can be something that the internal staff buy into, and then build from there. And there's a lot of expertise out there. So we'll touch on a bit later, I'm sure. Partners within the world of AI is actually look outside again, and see where there's some best practice in other financial institutions in the UK. But it's a small world now. So actually there might be a retail bank in Thailand that's got a little use case that is relevant here in the UK, or an insurance firm in South Africa, or a startup bank in the Middle East. There's lots of access to use cases in intelligence that you could just pick and say, okay, actually that fits with us. Let's try that. But my view is start really small. And then build confidence from there.
Pick a few use cases and be really focused rather than that kind of scattergun approach.
Yeah, absolutely.
So Rob, from the BS perspective, that the friction between kind of technology and cutting edge new technology, how you find it from your perspective?
Well, I think you said it in your comment there. It is a challenge between sort of for banks and business sites in terms of that legacy technology and sort of newer systems and how you integrate both of those. I think over the last couple of years been a kind of rapid adoption of things like RPA, robotic process automation, and APIs to kind of get out at least that manual rekeying. But we're starting to see sort of people applying sort of older systems with newer systems, either midware or even around with mortgage lending. I think it is a challenge for the mortgage lending that our members do. It is often, complex. It's more complicated. It's not something where you can take a sort of a vanilla banking approach and apply that to the kind of building society sector. They have an awful lot of detail within that, but there are opportunities. So I think one of those is around artificial intelligence and sort of trying to package a case. So we've already seen kind of members applying technology where the AI will help the broker to kind of build that actually package case, so the underwriter, when they come to it, has all the information and they can make that call. And that is a big shift from kind of some of the technologies that have been in the market previously, where it's just caused an awful lot of frustration for underwriters in terms of they're not getting the systems are not able to allow them to kind of apply kind of their intelligence and their expertise to the case. And I think that is a huge kind of game changer for the sector.
It's interesting. Jenny, we were talking about just a minute ago around the fundamental differences between a building site and a bank, right? And maybe actually the need for absolute digital overhaul or mobile first type of banking is not quite the case because of those fundamental differences. Building sites aren't banks. They're not providing that full suite of banking kind of process and payments. So they don't necessarily need everything, do they?
No, I think it's a really important point that they're not providing, most of them, almost all of them, not providing current accounts, for example. They're providing, their businesses are built on the foundations of mortgages and savings. a mortgage is something you take out maybe every sort of 2 to 5 years. Most people, maybe even less frequent if you do a longer term deal. So it's not something that you need a mobile app in your pocket to look at every day. You're not doing contactless payments to buy stuff. There are different technology requirements and efficiencies that building societies do need to keep pace with in the market, just so they can compete with other lenders and work effectively with brokers, and also sort of meet the expectations of consumers. The savings side of things is probably a little bit more, there's more of a digital angle there. People can be paying money into their savings quite regularly, moving money around. They might be shopping around and moving their savings, and so there's a few more tech dynamics there. But a lot of the balances held by building societies are branch-based. They're branch-based savers. Rob was talking earlier about being in a new branch recently. I was in a new branch this week in Newcastle that opened up, and I was there for a couple of hours for the opening ceremony. There was a constant flow of customers coming in. I was fascinated. I didn't know what they were doing because they were either side of the... But there was never a moment that we were in the branch where there wasn't a customer there. It was a city centre branch in the middle of Newcastle. But it was, it was evidence that... I don't think that it wasn't staged. They were generally wandering in and saying, "What's going on? There's something happening today."
It's really interesting because branches are shrinking, they're decreasing. I'm sure we've all watched the advert from probably the biggest building society that's in the UK talking about branches. But did you say you've talked about a new one opening? You've talked about a new one opening. Is this a trend that we're going to continue to see in the building society space? Because it's interesting. My first experience, you talked about your son's first experience. My first experience of a building society, I grew up in a small town called Abbey, and there was the building society on the corner of the Market Square. I think it was called the Abbey Building Society from memory. And so I'd go with my dad every couple of weeks and deposit some money, as little as I would have got back then from grandparents and whatnot. And I kid you not, and I'm not making this up. That obviously is closed down. It's been replaced by a funeral parlour, and you couldn't ask for a better metaphor for branches. But it's exciting to hear that they are opening and they're getting the foot flow.
But the in terms of the building society sector share of branches is growing. So I think we've gone from 14% share in 2013 to today. I think it's 30% share. And given there's going to be kind of weekly closures from the banking sector for branches, that's only going to go one way, which is that the building society sector is going to grow their share. But, speaking to building societies, they're not doing this for the sake of it. They're laser focused from a business point of view. And this is a key way. Obviously, it's great to connect with communities, but this is a way to grow their investment base, their deposits. And one thing as well, just Julian was saying in terms of the numbers of people, but also the numbers of things that I would say, I haven't used one of these for a long while, but checks, are kind of definitely alive and well. Customers want to use them to kind of pay money in, but there's things like check imaging and other things like that. But, if you use mobile banking, this seems almost, completely alien to think, but they're, it still resonates for a lot of people.
Are they going to become like community hubs now? I guess is this notion of a branch changing from so just walking in with your book and paying some money? Are they starting to evolve into new things?
Yeah. Well, I think the technology allows that as well. So you no longer need sort of a row of glass framed kind of areas where you have your staff. Those things now actually are almost too costly to even remove in some instances. You have to kind of remove them. But modern kind of telecash recyclers, they can be put in the corner, or if you're just using even checks or something like that, you could have a check imaging software to kind of scan the checks as you're going through. So that opens up the space to invite the community in. If you want to showcase, lots of our members are inviting businesses in or community groups to kind of discuss, whatever they want to talk about, but also it's an opportunity to engage with them about their financial health or, kind of think about kind of how their finances. So it's a way to engage with the community much more.
So Julian, and that when you was at Newcastle and you was watching all these people flow in, I'm interested about the demographic, right? So is there my parents and even me to a degree, the notion of a branch is relatively fresh. We've been known and brought up to it. Our sons who are in their late teens, early teens, didn't even know what a building society was. How do they attract, and is there a balance between the two? How do they attract the new customers, the ones that didn't even know what a building society was, and reached their phone the moment that it started talking about a bank?
Yeah, I do think that's a real challenge for the sector. When I was in this Newcastle branch, the customers who came in were not, I wouldn't describe them as young.
Yeah.
Some of them were quite elderly, in fact. So, and I think that reflects a lot of what we heard when we spoke to the chief execs as well, that some of the long-standing customers like the ability to come into the branch, feel it's important. Yeah. You referred to community hubs. I think that's how they're described by a lot of building societies. Yeah. They are places where you go to sort of talk about money or to do stuff relating to money. I think what we've noticed with the modernisation of the branch networks was there was some movement of location. So there'd been some kind of analysis of where's the best place to have these buildings located. But also the modernisation of the interior. Rob was talking about sort of making a bit less bank-like. You don't need didn't need a protected cashier anymore, for example. So they're much more sort of welcoming spaces. We didn't see a lot of evidence of technology, the teching up of branches, to be honest. But we did hear about the how building societies were making them a viable part of their overall organisation. So they're not reliant on a flow of customers to keep the staff busy. They're using them as operational hubs. So they're people that are in branches will quite often be performing non-branch based tasks. Yeah. So sometimes they might be expert in a certain process or a certain situation. So the society would funnel those kinds of queries to that person. You can only do that if your tech infrastructure allows you to, of course, pass work around and sort of securely, do all the things you need to do, like call recording and that sort of stuff. Yeah. But that was a theme, and so that's making a branch viable beyond it being somewhere that there's a lot of footfall, because I think in a lot of branches there isn't strong footfall, and if you judge them on footfall alone, you probably wouldn't say that they're viable. Yeah. So
I guess the younger demographic, and one of the ways that building societies can attract that type of new membership is through first-time mortgages. They're good rates. Yeah. Relatively decent journey. It can be better with the use of new technology now. It's going to probably make it a lot more simple, but that's possibly a way to kind of hook the new members in.
Mm-hmm. I think I'd just like to come in there, Mark. You can probably tell by my accent, I'm from the south of the country. And I find it interesting in the sector when, so I live right on the south coast. So if you looked across that sort of underbelly of Sussex, Surrey and Kent, you haven't got the brand resonance from some of the larger building societies, especially that you do have sort of in the Midlands and sort of going north from there. So I'll go back to my son's stories around that resonance of what's visible locally on the high street. There's one in our local town, one of the larger ones. Yeah. But actually his natural reaction was, this is cool, how do I engage? Because there isn't that sort of Sussex or Kent building society. And I think there's a bit around how does digitalisation help the building societies spread their brand so that others that are of a different generation, but maybe not so local, which is a big value of the building societies, to connect with a saver or a borrower, of the future. And I go back again to balance. Balance of branch and digital, and going to the bit around community and spaces. Absolutely, how can that branch be an area that you go to for? There's a phrase in banking which was coined a while ago: beyond banking. How do you go for beyond building societies? So you've got your traditional savings and mortgages, but how could you get value around advisory, education, networking, other stuff that is above and beyond?
Comes back to community hubs.
Yeah, absolutely.
Making something slightly different. It's interesting because we're talking about that kind of first-time buyer and the home buyer process, and there was a tinge of criticism in the report. And I'm coming to you because from the BSA's perspective and from your kind of policy-making perspective, what did you think of that?
I think it's completely understandable in terms of the conveyancing process is incredibly painful for anyone that has to kind of go through it.
Yeah.
It took me 5 months to buy my last house, which was worse than it was when I bought the previous house 5 years before. So it's a clear frustration, and government and industry have been working on that, but it's been a hard nut to crack. But I think there is kind of momentum around that now. There's a lot of groups.
Yeah.
Kind of Julian's been working with different organisations around sort of how you can start to using things like open property data.
Yeah.
There's even Open Property Data Association now that's got a property trust framework.
Yeah.
So you think about how you might start to position sort of property data that could flow through and make that conveyancing process just so much easier. And even things like digital identity, maybe having a signature at the end that you don't have to have witnessed by some random person, your neighbour, or I did it for my neighbour the other day. I'm pretty sure it's an immediate requisition. My handwriting's illegible, but if you had something like a qualified electronic signature,
of course,
then that is something that wouldn't have to be witnessed, and actually would be, to a much higher standard than, I think I'm good friends with the neighbour, but I'm still random.
Now.
Yeah, exactly.
You've guaranteed the house.
Exactly. So it kind of takes that pressure out and actually uses technology for its sort of efficiency. So I think there is momentum in that respect.
It's interesting. I was chatting to a building society last week, funny enough, about a conveyancing process, and they was actually saying the amount of rework that has to happen post the approval of a mortgage. So it then goes to the valuation. It's never worth what has been said at the outset, but there's things like flood risk and the types of materials, the cladding even, and all these things that come up through the survey, which means either they have to then decline the mortgage or they have to redo it. And actually, they're talking about let's bring that process up to the front end now, so that when an applicant goes through the mortgage process, there's an integration into a Zoopla or a Rightmove or some form of AVM, so that they can get all that property data up front to allow them to make a far quicker and appropriate decision that's going to stick at the end of it. And it also reduces the time. But
we've got a long time to go with that. I mean, it's still a backwards process. You make a decision to buy something, and then you work with various professionals to work out whether that's a good idea for you or them as kind of a partner with that.
Yeah.
If you could reverse that process, but it's just a very, very different environment from where we are today.
Yeah. I guess that's the balance between working with the fintech space and the ecosystem and bringing in EID&V providers and e-signatures and open accounting, open data, open banking, so you can make the affordability as slick and as data-driven and automated as possible. And we're starting to see, I'm starting to see it from a FintechOS space, and you're probably seeing it, Mark, as well, from your world. There is a whole bunch of really active engagement now between the sector and fintechs that work in origination or in ID&V or credit risk, whatever it is, to try and smooth out that journey. Make it relatively digital, but blend it with the human, with the broker, with the branch folk, so that you have this happy marriage between all of them. Because ultimately, what people want is a far quicker decision. They want the fact that the confidence in the decision. And they don't want a mortgage; they want the house, right? That's the need. The mortgage is the part of the process that they have to go through. It's pain, so let's try and make it as less painful as possible. So, are you getting a lot of engagement from Sapient side?
Yeah, absolutely. I'd say probably in the mid-tier of the sector, where they're seeing around, and it came out of the report around, standing still is a risk. So we're seeing in the mid-tier are exploring what options are there around that blend, as you said, Mark, around human touch and not losing that sort of front end relationship with either the broker or the branch, but how can digital enable that to be safer? And I think sometimes the sector, banking and building societies, to start with making it safer. It's not just about the expedience of the journey and the speed. It's actually the data can actually make that better for the borrower and for the lender. So we're seeing a lot of appetite of interest. And I think, and Publicis, Sapient, we think the winners will be those that sort of go on that small step journey to modernize. But the blend of digital and human, when it's right for the lender and it's right for the broker or the borrower.
So, but Rob, is one of the issues around maybe some adoption of this type of stuff around the regulation that's kind of sized at certain building size. I think in the report it says one size fits all, but is there I think we were talking before, I think we were emailing before about some tiered regulation depending on the size of the building society. Would that make a difference?
I mean, in terms of if we're talking about the kind of housing and conveyancing and adoption of it, not necessarily about that, but in terms of kind of growth for the sector, which I think was another key theme from the report. It's definitely something we've been long arguing for around sort of regulation, in particular the prudential regulation for the sector. It's something that was a big topic when I joined the BSA 11 years ago. It still is, but we're really starting to see a lot of traction from it. There's been additional rules for the building society sector that the banking sector has not had. It's been around for 16 years, and at our conference, actually, the Bank of England, they announced that they were looking to sunset that in terms of consultation, and the primary reason is the kind of that framework was very much of its time. The kind of additional regulation that's come into that now has superseded it in terms of things like senior managers regime and other places. It's a much different environment, but we will also say it's still been very unfair that the kind of banking sector hasn't had it. So they're going to be looking to remove that. It's not deregulation. New regulations are there, but it's just removing additional layers that really will define what our members can do quite precisely. Fixed rate lending, different types of it. It is very precise, so it's good for that. And also in terms of Basel 3.1, there's also additional. There's a new regime that they're bringing forward. It's called Strong and Simple for organisations of a certain size. So a lot of our members will be looking to take advantage of that to reduce again the sort of regulatory load that they currently encompass, because there's a real lack of proportionality when it comes to regulation. Yeah,
that's helpful. And Julie, was there a kind of a lack of clarity that came across through the government's kind of vision for building societies within the port, and certainly some of the conversations your team would have had with the CEOs?
Well, I think in terms of the government's aspirations for the sector, they've been quite positive, and that they've stated they'd like to double the size of the mutual sector.
Which we're seeing, I guess, in some of the branches that are opening.
Some of the branch dynamics are quite interesting. There are multiple societies have opened branches. There's not suddenly going to be a doubling of the number of branches, I don't think. But in terms of doubling the size of the sector, a few questions around what does that mean, and how will we measure that, and how quickly. In the case of the building society sector, we've recently had Nationwide merging with Virgin Money, and then Coventry and Co-op. So it's kind of grown quite substantially already.
Loads of M&A that's been happening in the sector.
And maybe there'll be some more of that. That's an interesting area. But I think a lot of positivity from the chief execs that whatever the government means by doubling the size of the sector, they clearly see the value the sector's bringing and see it as something they'd like to have more of in society and in the economy. And I think that was the key message from the chief execs, was they felt that was encouraging, something to build on. And building societies are growing anyway. All the data in our report shows they're growing over time. The sector will double. There's a question of how fast you want to do it and how you want to measure it.
One of the things it's not growing in, which is interesting because it came out in the report, is this notion of green finance. So a whole bunch of products aimed at being green, but actually the take-up is really low.
Yeah, and it's a fascinating area because it's obviously a massive conversation point within the world. It's a global area of focus to sort of live in a more sustainably, and it applies to finance as well. Building societies are purpose-led organisations, like it fits perfectly.
Yeah, exactly.
It's bang on there with what they want to do. So they'd all experimented with this. At the moment, nobody seems to have found that golden thread. The issue is not necessarily creating the products and offering to people, it's consumer demand. So with financial products, it's not just a case of which is the greenest. It is going to be which is the best, which is the most convenient for somebody to take, which meets their personal needs. People don't have most people not able to have an infinite supply of money to spend it however they want. So people don't go for things that aren't the best financial deal. And at the moment, there's a few blockers on that front. And in the building society space, a lot of green finance is around mortgages and housing. So a lot of the conversation was around how do you give people green mortgages? What does that mean? Today it's been a little bit basic, sort of linked to things like EPC ratings on houses. In order to make a house more energy efficient and greener, you've got to spend money on it.
Of course you have,
And if you're going to spend money on it to get a marginally better mortgage rate, there needs to be some other reason that you're going to spend all that money. And I think there was a lot of calls amongst the chief execs for government support. And if you think about the way we've had support in the past for things like solar for houses, or we're now kind of seeing it for sort of types of boilers and that kind of stuff, that maybe there needs to be some government initiative, because otherwise it doesn't really stack up.
It always bemuses me when you see a new development go up, and that solar panels is not just a standard thing. I mean, they've put these big estates up. They should just be all full of solar panels, shouldn't they? It should just be standard. It bemuses me.
Yeah, I'm not an expert on the financial dynamics of solar panels, but new housing is typically green housing. To a degree, it's much greener than older stock. It's energy efficient. It's built using more sustainable materials. I know there's different levels of that, and you could criticise elements of new building as well, but the newer housing is not the problem. It's the existing stock.
And that's the problem with it. You need to kind of take that whole of market approach, because only, I think, just over a quarter of houses have a mortgage on it. The majority are owned outright. Then obviously you've got private rental, social housing. You need a whole sector approach if you're really looking, the end goal in terms of bringing down emissions for kind of UK's housing stock. I wonder how you do that if 75% of people haven't got that hook into going green. I guess it's the whole market approach to try and bring everybody into it. Whether everybody's got that same social impact of being green. I know there's regulations coming for certainly in the banking sector around green as well, making sure that our stock is going up that EPC register up to the A's and B's. So there's a lot of work to be done, which is something that we'll watch, no doubt, and then hopefully it won't take 250 years. But as the building site is mature, we'll hopefully see that progress. We're reaching the end of the podcast, folks, so you can all take a nice relax. But I always kind of end the podcast on this future view, certainly your views of what do you think is going to be coming soon. I guess the first thing I wanted to come over to you, Mark, is just if you had to pinpoint some of the key takeaways from the Whitecap report, what resonated the most with you?
I think the need to safely transition into modernisation with AI technology, but keeping the core values of the sector at the heart. It was a key takeaway. I just wanted to come back on something that Julian said just very quickly, Mark, if that's okay. I think from a government's perspective, a huge opportunity, but also requirement of the building society sector is how to serve the lower end of the SME sector. So when you're looking at commercial mortgages, there's a lot of untapped need and demand in there, and I think the building societies who look after the retail part of the market extremely well, there's a need there of how do you then blend that into some of those smaller business operators, that are sometimes underserved by some of the commercial banks through
You're being very kind.
through legacy systems and regulation and cost to serve. And sat at a government viewpoint looking back in, I think the government will be really supportive of how do they support the building societies to especially sort of fulfill that need. Is something just to pull out on what Julian was just saying.
What about you, Rob?
Well, I kind of, what really resonated with me when I first read it was around sort of regulation. I think it kind of hit on a lot.
Kind of plays into your space a little bit.
Yeah, the touch points, and it's something we've been arguing about as well for a long while. But I mean, in terms of that modernization, I think standardization will become a really big thing. We're already seeing that in terms of some members are looking at potentially standardization and passbook dimension, so you can sort of start to reduce those. You
won't let go of that passbook, will you? You love that passbook.
Exactly. Cold dead hand.
Yeah.
Kind of, but yeah, also around sort of standardization of data and other bits. And I think, our members are also looking at newer technology in branch. So as Julian said earlier on around, only a minority of our members offer current accounts, and then even actually a minority of them offer even an ATM or something like that. Yeah. But some of them are starting to offer sort of multi-bank kiosks where they use open banking rails to provide cash access within communities. So I think there's a lot of scope for sort of innovation and new ways of actually how you connect with customers.
Yeah, and yourself, Julian, as one of the authors of the report.
Yeah, I am. Yeah, I think there's a lot of things for the sector to keep their finger on the pulse with, and we talked about many of them today around modernisation, technology, figuring out the best ways to stay true to their purpose but to grow at the same time. I think if I picked one thing that I'm really interested in how it evolves, it's the impact of AI on financial advice. I just think that the capabilities of AI is moving so fast that although we've long sort of held advice up as being something that really needs to be protected and treated very carefully, which is still the case, I do think the capabilities of AI are going to push the boundaries, and we might see some quite significant changes in the industry if it proves to be reliable in that space.
What a fantastic way to finish the podcast on AI, as always it is. So look, I guess from me, I just wanted to thank you all for coming on today. Thank the team at Whitecap for putting together a great report. You can find the Whitecap report on the FintechOS website. There's links to it. I'm sure there's also links to it on your website as well. So I'd ask our viewers and listeners to go and download that and give that a read. And of course, subscribe and like this episode and subscribe to other ones as well. I'm sure you guys will be on again as this subject matures and evolves as well, and roll on the next 250 years of building societies. Thank you.
Lovely. Thank you, Mark.